Welcome to Investors Insights. Our topic today is, will the government shutdown impact your money? That's a hot topic in all the news media. It sounds like the whole government is just closing their doors, and it's going to be a while before they open back up. But Bobby, you brought up good points in our meeting today about what that really means.
Yeah, that was big news over the weekend with the government shutdown, and historically it has a low impact. In fact, the last shutdown lasted 16 days back in 2013, but this year is a little different. We have a much better economy than we did in 2013. Also, this week, the market is going to be concentrated on earnings and then the fourth quarter GDP report on Friday.
Okay.
And going to earnings, I mean, the earnings we're looking at very closely here. The question is, are expectations too high, or will forward guidance be so much better because of the tax reform? It's going to be very important.
Yeah.
And so,
well, corporate earnings have continued to, just come out, and they've been better and better, and that's, caused a lot of strength in this market, which in turn translates into portfolios.
If it doesn't have an impact, it might be 0.1% of GDP.
Yeah.
And then because 85% of the government's still working.
Yeah.
So that's the thing. They call it a shutdown, but technically it's not really a
right. And that's
true
what
shutdown.
that's what our viewers of our vlog need to understand.
Yes.
What does that really translate into? That's a media headline that is not in terms of going to have, we think, a major impact. Yeah, exactly. And in addition to that, we've talked about earnings increasing. I think one of the new topics that will we see interest rates going up? Janet Yellen is coming up here, have her last meeting as chairperson of the Fed. Right. And so that's going to create dialogue, that transition. Also with a weak dollar, the dialogue will be the impact on companies that have international operations. Right. That should be a positive for them. And then from the standpoint of, will the Fed start talking about raising interest rates faster, more hawkish than anybody expected? That may have a bigger impact in terms of news media than government shutdown. Yeah. But then, Ashley, you brought up about energy. Talk about that.
Amazing. We've talked a good bit on this vlog about the energy revolution in the United States with fracking.
Right.
And it's been coming. This year, for the first time since 1970, we'll have more oil output than Saudi Arabia.
The United States will.
In the United States, it will totally change the political dynamic this year with the Middle East.
Okay.
So that's huge.
Yes.
And the shale producers, speaking of fracking, they're going to make good money this year, which is where a lot of that is coming from. Right. So that's flipping that dynamic over. Right. We hadn't had that in a long time.
Absolutely. And then also talking about the Fed, when I was making those comments, is that you talked about deregulation on the banking side. It's one thing to listen to the Fed chairperson in the Fed board, but there are others on the banking side that we might need to pay attention to. Talk
Absolutely,
about that.
That's a great point. One thing that's missed many times, because people are always talking about interest rates,
right,
is the Fed's a huge supervisory animal over the financial institution in the country. Last week, Randall Quarles, who is their main deputy over supervision, you could tell in his comments to a group of banking lawyers that this is going to be a much more deregulated climate from the Fed versus 10 years ago. What that means, banks can lend more, companies do better.
Sure.
They won't have to keep as much reserve. Right. That cash can come off a bank's balance sheet and lend to an undermanaged business instead.
Right. For growth.
Absolutely.
Yeah,
just good on good. It just enhances all of this other good we're seeing.
Which adds to the overall strength of the economy.
Yes.
So on that note, let us just say that every time we do these vlogs, we try to bring some of the pieces of the puzzle together for you to understand the noise that might be out there in the media and how to understand that and how it may impact your portfolio, or how some of those pieces of the puzzle come together to create a rippling effect within the market. In terms of specific recommendations, that's where we narrow it down to each and every individual client. But from the standpoint, we want you to have knowledge which allows you to understand when the market is volatile, how it could impact your overall portfolio or financial goals. So, and in addition to that, we constantly are giving out information on Facebook, Twitter, LinkedIn, news articles, highlights of other news stories that are parts of those pieces of the puzzle that may relate to you or at least just make you a better informed investor. So keep in touch with us through that way, as well as the fact we enjoy the one-on-one meetings, the one-on-one phone conversations, the emails, and we're going to stay in touch with you throughout the week. Thanks again. If this has been beneficial, share it with someone, and we look forward to talking to you soon.